Turning now to some business news, and regulators in the United States have told 9 major technology companies, including Facebook and Amazon, to hand over information on how they handle user data. It's part of a major review on how personal information is collected and used by these companies. To find out more, we can speak to our business editor, Stephen Carroll. Stephen, so what exactly are these companies being investigated for?
It goes to the heart, really, of how big technology companies make their money, and that is by collecting data on users, browsing on their services, and then using it to better target ads for those users. So the Federal Trade Commission is now asking 9 major video streaming and social media companies, the likes of WhatsApp, Facebook, YouTube, Twitter, Snapchat and Twitch, the streaming service owned by Amazon, to share data on exactly how they collect and also how they use that user data. The FTC says that they want to look under the hood of these companies and see what is driving their engines. So it is a look into how these companies operate. They'll have 45 days to supply that information to the Federal Trade Commission. The FTC particularly interested in how the data is used related to young people, to children and to teenagers, and to see how data practices in these companies operate for those particular users as well. This coming at a time that we're seeing increased scrutiny around big technology companies. Just last week, the Federal Trade Commission and 48 attorneys general in the United States started taking a case against Facebook. That was to do with alleged abuse of dominance by the company in the social media sphere. But there were also 2 big cases, or 2 big fines, I should say, issued by the FTC last year on data privacy issues, one for Facebook, one for YouTube. So it is an issue we're seeing increasing scrutiny of, and this at a time when in Europe, we're having the European Commission later today unveil its new plans to regulate the tech industry, which will be the biggest overhaul of the European tech regulations in 20 years.
Meanwhile, Stephen, the social media site Pinterest has paid a record settlement to a former executive after she claimed she was discriminated against because of her gender.
Yeah, that's right. Pinterest has paid $22.5 million to settle this case being taken by its former chief operating officer, Françoise Bruguère. Now, Ms. Bruguère had sued the company in August of this year, claiming that they had excluded her from meetings when she had pushed for equal pay at the company, and she had raised concern about sexist comments by her colleagues. Now, she says the company ultimately fired her over this. Her legal complaint said that the move had solidified Pinterest's unwelcoming environment for women and minorities. This at a social media company where the majority of users are women. Now, this case has now been settled for this record amount, $22.5 million. $2.5 million of that will be a donation to charity, which will go towards organisations that promote women and minorities in technology. In a joint statement from Pinterest and from Françoise Bruguère, Pinterest said that it recognised the importance of fostering a workplace environment that is diverse, equitable and inclusive, while Françoise Bruguère said that she welcomed the meaningful steps that Pinterest had taken to improve its workplace. This case is significant for a couple of reasons, one of which is that it has played out in public. This is a public settlement of a case like this, many of which are settled privacy. Françoise Bruguère had written a very long Medium post a couple of months ago explaining why she was taking this action against the company. So to see a high-profile resolution to that is significant as well. And also, of course, the size of the award, the biggest that we've seen publicly for a gender discrimination case in the US.
Well, staying in the United States, Stephen, still no announcement of an agreement on an economic stimulus plan in Washington, but it sounds like it could be getting closer to one.
Well, we've been saying that for quite a while now. These talks, of course, ongoing since this summer to try to find more economic stimulus. Much needed, it should be said, for the US economy. The plan now coming down to a stopgap measure which would try to tide over the finances until the Biden administration takes over in January. And of course, we have the changing of the guard in the House and the Senate as well. This new proposal coming from a bipartisan group of senators worth just under $750 billion. It would include money for small businesses and for unemployment benefits, but several key measures demanded by both sides taken out of this package to try to get it passed. The Senate Minority Leader, the Democrat Dick Durbin, calling it an honest compromise. Lawmakers under big pressure to do a deal on stimulus in time for Christmas to try to provide that much needed extra help for sectors of the US economy. This has been a big issue that the stock markets have been watching over recent weeks as well. If we take a look at the latest trading on Asian markets today, all the main markets there trading in the red. Of course, worries about coronavirus weighing on investors' minds despite the beginning of the rollout of the vaccine that we're now seeing in several countries. The Nikkei in Tokyo finishing the day down 1/5%.
Stephen Carroll, our business editor, thanks indeed for that update.